All right, to our first conversation now. Nigerian consumer goods sectors navigating a complex landscape of challenges and opportunities. Despite facing headwinds from inflation, currency devaluation, and rising input costs, the sector witnessed significant nominal growth in 2023. This now we'll delve into key drivers of growth from previous years into 2024 and what to expect for 2025, and explore strategies for mitigating the impact of external shocks. At this point, joining us is Nathaniel Disu, investment research analyst at AfriInvest, joining me from Ikoyi via Zoom. Great to have you on the show. Good afternoon.
Yeah, good afternoon, Ladi. Good to be on the show again.
Yeah, so from getting inflation data for December yesterday, most analysts have said this inflation data kind of beats expectations. You know, at this point, most people were expecting inflation would get to about 35% in December, you know, considering all of the spending, you know, for dirty December. Speak to me about that. How are analysts, you know, viewing this December inflation before we go into consumer goods?
Okay, thank you very much. So just recently, a few days ago, the MPS released the inflation data for December, showing that that the headline inflation rose to 34.8%. And despite the fact that December had a lot of economic activities in terms of the entertainment industry, which was largely failed by the dirty December craze. So we saw that there were a whole lot of activities, and it's not surprising that inflation still went up slightly last year. For that was for the month of December. But looking at the rebasing exercise that the MPS did last week, Thursday, I think, if we look at the rebasing exercise in the computation of the index, if you look at the core basic amenities for human beings, that's food, shelter, and also clothing, we could say that the weighting of those indexes was reduced. It was reduced, and that is not really that doesn't really reflect the true state of the average Nigerian consumers, because if you look at it, the amount an average Nigerian spends on food has gone up. The amount an average Nigerian spends on clothing and also shelter in terms of accommodation has also gone up. So looking at the rebasing exercise that the CBN did, if you look at other segments of the index, for example, restaurants and accommodation, that went high, which is quietly understandable. But looking at those three core index, that is food, that could likely see a decline in food inflation, especially this coming month. But that doesn't reflect the true state of the economy in terms of prices of goods and services. We could see that price of foods is still going up, prices of clothing and shelter is still going up. So despite the fact that people are still spending more on these basic amenities, in the rebased CPI index, we could see that the weighting of these three categories has already gone down.
All right, let's look at the consumer goods sector now. What would you say are the key factors, you know, contributing to the significant nominal growth in Nigeria's consumer goods sector, you know, despite the challenges, you know, we've seen posed by inflation and currency devaluation?
Okay, yes, concerning the consumer goods sector, just like in the reports that we published, the AfriInvest consumer goods reports that we published just last month, we looked at different drivers of the consumer goods sector, and we would say that despite the macroeconomic headwinds that is currently happening in that sector, we could see that players are still able to drive up revenue. If you look at the full year results in 2023 and also half year 2024, you would say that the major players didn't really find it difficult to get revenue. They were still able to make a lot of sales despite the economic situation. But the major headwinds that is affecting that sector is rising cost of raw materials and also FX volatility. Those were the major drivers that affected that sector. But based on the reports that we just published, we could see that despite all these headwinds, there are some players that are still making significant wave in that sector. For example, Boa Foods just last year did about 100% growth, that's in the share price alone. And if you look at their figures, that's in terms of other players in that sector, most of them recorded negative shareholder fund, negative profit after tax. But Boa Foods did about over 100 billion naira profit after tax. So we could say that there are still a lot of opportunities in that sector. Also in the sugar subsector, we could see that there are still some opportunities depending on how well players are able to be flexible in terms of pricing dynamics and meeting the needs of the average Nigerian.
And, talk to me about how, the Nigerian consumer goods industry can mitigate the impact of foreign exchange volatility. We remember, 2023, 2024 was all about FX losses, and we're also seeing rising input costs. All of that, playing on profitability. How can they wing it in 2025?
Okay, yes. So for this year, that's also one of the things that we highlighted in our report, that despite the FX challenges that is affecting players, there are still some strategic moves that some industry players can either implement or also fast track to mitigate the impact of the FX volatility. One of the major drivers that they can do is backward integration project, which is what we've been seeing in players like Dangote Sugar, Unilever, and Nestle. So, for example, Nestle's foreign exchange losses, one of the main reasons why Nestle recorded negative shareholder fund is that they have high exposure to FX. Most of their loans, about 90% or so of their loans, were from their parent company. And due to the FX volatility, that would have an impact on them. So if major players can able to look inwards, that's where the backward integration project comes into play. They're able to source for most of their raw materials locally, which is what Unilever is doing. For example, if you look at Unilever and Nestle, they're into similar line of business, especially for the food aspect. But Unilever still recorded positive profit after tax for 2023 full year and also half year 2024. But Nestle, on the other hand, they recorded negative shareholder fund. So backward integration project and reducing exposure to FX are one of the mitigating factors that major industry players can do to experience stability. Although, if you look at it on the positive side also, the effect of FX volatility that we saw in 2024 is not going to be the same in 2025. So we're likely to see a bit of stability this year in terms of the consumer goods sector, especially for their books. But this year is just more like a stability phase. It doesn't still show that they are out of the danger zone yet. So this year's financial statement, especially the Q1 numbers and the half-year numbers, is going to give a true reflection of the state of the consumer goods sector, if they are able to mitigate these challenges or if they are still in the danger zone.
Let's look at the exits, from that sector. We had a couple of multinational companies, like Unilever, P&G. They did, exit the market. Talk to me about the long-term development, of the Nigerian consumer goods sector, with some of these exits that we've seen.
Okay, yeah, thank you very much for that. So in terms of the exits, that's still one of the things that we are keeping track of in the consumer goods sector. So, for example, in the home and personal care subsector, which we highlighted in our report, two of the major listed players in that sector is Unilever and PZ. But Unilever, they've already exited the personal care business of their business. They did that in 2023 and in 2023, 2024. But also late last year, we saw that PZ is already beginning the process of looking at the possibility of exiting Africa. Yeah, so that would actually put a strain on the entire home and personal care business, because if PZ eventually exits and Unilever's position in that subsector also exit, there will not be any major players in the home and personal care sector on the index, that is on the listed companies. So there are a lot of opportunities out there also in terms of the home and personal care business. But if we still see more multinationals leaving Nigeria this year, it's going to cast a lot of strain further in the consumer goods sector, and the outlook will continue to be bleak.
All right, let's look at a particular segment now of that sector. That's the sugar industry, and there's some competition brewing there. Talk to me about how, Dangote Sugar can respond to growing competition from Boa Foods and, maintain its market leadership.
Yeah, so in terms of the sugar industry, that's one of the fascinating subsectors in the consumer good index, which was what we also highlighted in our report. For the past couple of years, I think 3 years or so, Dangote Sugar has been the major market leader in that space. But just last year, we saw that Boa Foods is gaining more grounds in the sugar industry, and based on our own projection, we are expecting Boa Foods to become the new market leader in the sugar industry. And one of the things that Boa Foods is doing differently compared to Dangote Sugar is that they are adopting more of business to customer strategy, B2C strategy. They are doing more in that space compared to Dangote Sugar, because if you look at their financial statements, retail sales, Boa Foods did more in terms of a retail sales than Dangote Sugar last year. That's 2023 and also half year 2024. So particularly half year 2024, we saw that Boa Foods made more revenue in terms of sugar sales than Dangote Sugar. So we are expecting that in 2025, Boa Foods is going to become the new market leader in the sugar industry due to their strategic moves in terms of the business to customer strategy and retail sales. So that's one of the reasons why we are expecting that to happen. Because if you look at the chart showing on the screen, Boa Foods is the one with light blue, has 269 billion naira, while Dangote Sugar, which is the dark blue at the bottom, has 292. So we could say that in 2023, the gap was really, really tight. But in half year 2024, we saw that Boa Foods already eclipsed Dangote Sugar. So by the time the full year numbers of 2024 will be released around that February thereabout, we are going to expect that Boa Foods will become the new market leader in terms of the sugar subsector in the consumer goods sector in Nigeria.
Right, and talk to me about strategies that the Nigerian government can implement to support domestic sugar production and reduce reliance on imports.
So one of the things that the federal government can do to support the moves is to make the business environment friendlier to major players, because like we've already talked about, one of the major challenges that the consumer goods sector is facing is high cost of raw materials, sugar imports, which is backed up by the FX volatility. So if the FX price is stabilized, that can also make things easier. And also in terms of the backward integration projects, the federal government can also assist the major players in that space, because by the time they are doing more locally, it would reduce the exposure to FX and the effect of FX volatility, and that would see major players posting positive bottom line figures.
All right, definitely a lot to look out for in 2025. Hopefully we won't get headlines when we're seeing those earnings about FX losses, since we've seen the Naira being quite stable. But thank you so much, Nathaniel Disu, investment research analyst at AfriInvest. Thank you.
Thank you very much, Ladi.